happens at the beginning when it's all promise. Because fundamentally, let's say you're legitimate, I'm illegitimate.
Hello everyone. Hello. Can you guys hear me well? Welcome to another Friday. Welcome to another live stream where we talk about crypto options. We talk about crypto markets. Today is a little bit of a weirder day just because Brazil this afternoon just got eliminated from the World Cup, lost to Croatia. So if you saw that, it was a really good match, a really amazing football match. It went to the penalties, but so today, if you hear any noise, it's just because Brazilians here are making a lot of noise. Brazilians like to celebrate on winning and losing situations. So even though we lost, there's a party going on here. I think the party was gonna go on either way. So that's something that it's sad for Brazilians who enjoy soccer, people who enjoy soccer. But I still think the World Cup has very good opponents. Croatia is really good. Morocco is very good. But I'm personally looking forward to see the Netherlands win. These guys have an amazing soccer team, football team, and they have been at the top for a long time. They have never won any World Cup, but they do have a very strong team. So I'm hoping to see a very good match and to see them win this World Cup. So with soccer, football, whatever you call it, out of the way, let's move on to crypto options. Let's talk about the specifics. Today we're going to talk about Theta a little bit. It was something that was asked by a couple of people. So if you have a topic for next Friday, make sure to drop it down below. Make sure to ask me questions, to let me know what do you like to see, what would you like to see, what would you like to have explained, so I can work during the week to create the better, really good content to bring to you every Friday. So before we start talking about Theta, for the people who are who have been following the channel, the live streams for quite a while, you know, I have a options pool that I created for investors who don't have the time or don't want to invest time into understanding how options work. So I created this option pool. I know, Funny Toro, hello, Armin. There's a couple of people who watch me that are part of that option pool, which is private. Again, that's something you need to reach out to me if you would like to be part of it. But for those who are in that, I already opened the position. So I already opened the position before the live stream. I usually do it after the live stream, but today was a different day just because the delta that I wanted, the option that I wanted, had a very low delta, and every time I do the stream and then I go open the position into the option for the option pool, this strike is already gone. So what I did, I opened it, the safe one first, which I'm going to show it to you. The safe one, I opened it first here on the option pool. that I manage on the hedge. And then now I'm going to open my position on my portfolio. We're going to talk about how the portfolio is performing, how everything is going. But before we do, I would like to show, just to be very transparent, which is what I'm trying to do, about the option selling protocol. So if you come right here, let me actually click on manage. Let me show that to you on Lira. There we go. If we go to portfolio, this is the option that we chose for next week. This is not the option that I actually am going to choose for myself, for my own money. But this one, I like to take it very, very safe. I like to play it safe with the option pool. The APYs are going to be less, but the yield is going to be less, but is way safer. So I like to play it safe just because it is not my money. And eventually, if the yields, if the pool starts to perform better, and people would like to take more risks, if the people choose to do that, then I can take a little bit more risks, like I do with my personal money. But if we scroll down, we see we collected $9.90 in premium, and we are using almost full collateral. I don't like to use everything that we have in the pool, just because I would like to have some money in case we need to buy back, and in case we need to close with a loss, which is what happened the first week of this pool. We had a major loss because of IV. We got crushed, but in the opposite way, because IV actually rose when it was a low IV. Again, this is another week with very low IV. We have a 63% IV, which is not very good, but it's not bad either. 60 is an okayish. Under 50, I don't trade options. If it is under 50, I'd say it's better for you to not trade as well. But this is the position. We are actually leveraged a little bit. We're leveraged 2x. So there's a little bit of leverage going on, but our liquidation right here is very low. So there is no risks for this sort of leverage. So we're using that. So let's calculate the yield for this option that we opened. We have 990, and we'll divide that by the collateral, which is 970. So we have a 1% yield for this week, which is way more than what I try to get to, which is usually 0.7. So the past week as well for this option, for this pool, was profitable, which the option that just expired today, it was profitable. We had that major red week, but we're going back again with this one. If this one ends out of the money for us, if it expires worthless, meaning that we keep the full premium, we should be above our starting price, the starting price of the pool. So very excited for that. I hope this goes well. Of course, it is bad to start something and then that starts negative. So I'm hoping that we'll see green from now on. So now that we have that out of the way, let me go back here to see if we have any questions. No questions. So now that we have that out of the way, let's take a look personally on what I want to do for this week. If we take a look here at Ethereum, this was the strike for last week. So $1,200 strike. This was it, and we closed way above. Yesterday, Ethereum rose a lot. We were in the 1230s, so we were around 24, 25 delta, which was very scary. I was talking to Erman, and I was saying, Erman, this is getting scary. But because we had very low implied volatility, I wasn't really scared that we would lose money, more that we would get just like 0-0, like no loss but no gain. But eventually Ethereum went up, and it confirmed a couple of things. So it confirmed that we have this orange line right here acting as a resistance, which it was a support a couple of months back. So it was a support in June and July. So it became resistance, and it tested twice right here. So we do know that this is a very strong resistance. And this support right here, which came from November 22nd, November 21st, actually, it tested twice, and now it tested 3 times. Actually, it went a little bit through. It tested the 20 moving average, tested the 20 moving average, and then it bounced back up. It means that this right here is still a very strong support. So we have a very close support and a very close resistance. but we are above in the RSI. So I do think it was just going to bounce back and stay between these for a couple of days and then break either above or under. Okay, then we're going to see a spike in volatility. We can confirm this if we look to the S&P 500. For example, we have this resistance right here going all the way from when was this? These ads. From the beginning of 2022, then it tested again in March, then it tested again in August, it tested again now in December. And also this support right here, if I'm saying gibberish, I'd like Erwin to help me out. He knows more about technical analysis than I do. We also have the support right here, which was tested multiple times all the way from October. And we're still inside this range. Of course, again, it will have a breakout above or under. But I think next week we will see dovish news from Papa Powell. You know, I think they need to show something positive, because otherwise everyone is just going to start going into panic mode. And we don't want that for the economy, just because people in panic mode, they tend to do stupid decisions. Okay. So to avoid stupid decisions, I think Papa Powell is going to lower the interest rate. So I think we're not going to see 75% hike. I think we're going to see 50 base points hike, probably, maybe. I don't think we're going to see less than that, but I think we're just going to see it slow it down so much. So because of this, I do think this week we need to sell another put. We sold the 1200 and we confirmed that volatility is still very low. We have right here 63 volatility, 58 volatility, and for puts, for calls, we actually have 50% volatility. So very, very low on the call side. This is why I'm avoiding calls for this week, because we have a 50% volatility, implied volatility, which I don't like. I personally don't like this. Sorry, I just got a spam message on Discord. This is what I was saying before. I don't like low implied volatility. I don't sell low IV, and 50 is already very, very close to what I don't like to sell. And if I go to the put side, we have 63, we have 60. So we have really, really good values here, really good numbers. So this week is going to be puts. Okay, so this one is the one I sold on the option pool. If you saw the 1150, the 1150 has a 13 delta. It went down because it was 14 before. So really, really good. Low delta under 20 is the best thing that you can choose when you're starting, when you don't want to take risks. So this is a really good one. But you know, last week I did the same thing. Instead of choosing the 1150, I chose the 1200. And the 1200 has a 24 delta as well, with a 60 implied volatility. So if we look on the charts for implied volatility, for the December 23, no, I wanted to the 16th. You can see IV dropped a lot. IV went from 78 a couple of days ago to now 65%. This is an average, okay? This is an average between all these strikes for that expiration date. Excuse me. So this is what we have, 65. I do think it's going to climb up a little bit, but then it's going to drop again. And if implied volatility goes up, but it goes up in my favor, meaning that we saw the put and then Ethereum goes up really, really fast because implied volatility went up really, really fast, then that is good for me, because when you sell a put, you want it to go up or to stay the same. You don't want it to go down, which is our case. So since I believe we're going to have a little bit of bullish news, but not very much. So let me rephrase. I don't think we're going to have bullish news. I just don't think we're going to have bearish news. So instead of having bearish news, we're going to have bullish or neutral news from the Fed. So because of that, I am betting that Ethereum will go up or will stay the same, which is what I want. I don't want it to go down. And since last week was an okay call, okay, it was an okay put to sell, I think I'm going to do that again. I'm going to collect the premium, I'm going to sell this and see where it goes, okay? So, but before I do that, we should talk about Theta. What is Theta? I have here this very good explanation, which we're going to go through. But Theta, you can find it right here. It is the time indicator. Closed. It is the time indicator. Time for sellers, it is an amazing thing. As a seller, you want the highest Theta you can have. So if you can choose, if you don't know where to choose, both puts and calls have the same delta, have the same premium, but have different thetas, which can happen, then you should choose the theta with, you should choose the option with the highest theta. Okay, so if you are, if you don't know which one to pick, so you have either to sell a call or you sell a put, but you don't know which one you should pick. Look, and every data is okay, is the same or very close to. Then you just look at data. If there's one that has significant or has a higher theta than the other, you should pick that one. Okay, just because theta is gonna help you in being profitable in that option. Just why? Well, because theta is also known as time decay. It is how much the option loses its price on a daily basis. Okay, so represents how much an option's premium may decay each day with all other factors remaining the same. So if Ethereum never moves from the price that it is right now, which is 1,267, if Ethereum stays fixed at 1,267 for the next week, Delta is not going to move, Vega is not going to move, but Theta is going to move. So the price of your option, even though the Ethereum itself stay the same, the price of your option every day that you refresh the page and look, the price will be lower each and every day. If you go hour by hour, refresh the page, you will see that the option price that you paid for is going to be lower and lower and lower and lower until it reaches zero. Why? Because of Theta. Theta is the time decay. If nothing else moves, Theta will still be acting upon the price of your option. So we can see the further out of the money that we have, so the further expiration we have. So if we're trading, if we are selling an option, let's say for December or January, so by Christmas or over, like by January, you will see the Theta will be very, very low. We can actually prove this. If we go to December 30th and we look at Theta, you can see the Theta now is only 1.3. Even if we go very close to the money, 1.7. Go out of the money, 0.8. If we go very in the money, it is 0.9. So the highest one is this, 1.3. But if we go back to our next week, it is 2.6. So you see, the closer we are to expiration, the higher delta will act on your premium. The higher theta will act on your premium. So why is it good for us sellers? Because when you sell something, you want to buy it back for zero as an option seller. So you sold it, you collected the premium. You sold it for 10 bucks. You collected these 10 bucks. When you want to buy it back, since you open a position by selling, you want to close the position by buying it back. You want to buy it back for as cheap as you can. And for us, the cheapest you can buy the option is at zero. Actually, the protocol does that by itself once it reaches expiration date, but you can close it before. So if you sold to open, you buy to close. And Theta will help you. Theta will help you because you bought it, you sold it at a very specific price. You collected that premium, and that premium on that option should go down. It is in your favor that it goes down. Okay. Once you collected the premium, you want the option price to go down to zero. That's what you want. Not if you're a buyer. So when you're buying, you have to take care. You have to understand about Theta, because Theta will go against you. So you have Theta and you have Vega going against you when you're a buyer. So this is why I don't buy options that much. I simply sell them, because as a buyer, I would have time against me and volatility against me. Okay. We also have volatility against us when we are sellers, but that is way less of a factor than if we are buying these options. So over time, these options will lose each and every day, each and every hour. They will lose some cents, some cents, maybe some dollars, depending on how much the premium is, how much expensive the premium is. And Theta is not linear. It's not like from now on, every day is going to lose $1. So $1, $1, $1. No, the closer it gets, to expiration, it's going to go up in price. So now it's $1, maybe it will be $1.10 tomorrow, $1.50 the next day, and then $3, and then $4 until it goes to zero. Okay, until the option price goes to zero. So you can see the closer the option is near the money, so close to the actual price of the strike, the actual price of the asset, the more Theta accelerates in taking away that premium, you know. So you can see right here, there's a few examples, but this is what I was gonna say. Buyer, beware. Since we are sellers, or I am a seller, I don't buy options that much. Only when I'm predicting a very high movement from the market, then I do that. But majority of the time, I'm just a seller. But for you buyers, people who try to buy options to speculate, to predict a high movement from the market, you have to understand that since every option is decaying in value, time favors the seller. The buyer needs extreme price movements to tip the scales. So this is why we see a bunch of buyers, a bunch of option traders, or wannabe traders, that even though they get the direction right, they do get the pricing right, the strike rights, they lose money, or they don't make as much money as they calculated. Why? Because of Theta. So if we have no movement in volatility, no movement in the asset itself, but it goes up a little bit, the option sometimes is not going to grow up in value. It's not going to go up in value because of Theta. Theta is slowly taking away a little bit of the price of the option. So this is why you need to be very careful for longing, for buying these options, these calls, or buying these puts, whatever. Funny Toro said, is it better to buy options when the volatility is low? Yes, when volatility and Theta are low, it is better for you to buy options, either calls or puts. It doesn't really matter. It is up to you if you think the market's going to go up or down. This is the best way. Okay. Now, if you think the market actually has is going to go, you don't know where it's going to go, but it's just going to stay stagnant, then it is better for you to sell these options, because you're going to sell volatility. When you sell an option, you usually are also selling volatility. So it depends on what is your strategy. For us, they are trying to generate income. We sell high volatility and we sell high Theta. This is what we do. Most of the times IV is high, so selling more profitable. So yeah, selling is more profitable over time if you get it right, okay? Because as you saw here, every Friday, I collect, let's say 2%, I collect 3%, 1% every week. So let's say this month, for example, this month I've made, we can see it right here, portfolio. Let me connect my wallet. 1 second. So if we go down here, we can see that my monthly, for the month, I've made 8%, 8.27%. I even made a tweet about it just now. Let's see if it loads. For some reason, it is not loading the... Okay, now it is 1 month. Let's see, should be 8.27%. 8.26. So this is how much my portfolio has grown by selling options. So it is more profitable. Maybe profitable is not the best word to use. Hello, Armat Coin. How are you doing? It is safer and more constant. This is the word, constant. Selling options is way more constant than buying options and making profits by buying options. Because, for example, I have right here this option that I bought. So I bought this option. I was just trading. I was just testing. So you can see it's only a $2.50 option that I bought. It is a long, so I bought a call, and you can see that it is already negative 2%, right? Or positive. I think it is negative. Yeah, it is negative 2%. I'm losing money with this, but with calls, when you buy calls or buy puts, if you do it right, so let's say you bought low IV, you bought low theta, IV goes to the moon, so it goes in your favor. Instead of making 2% per week, you might make 10% or 15% in a single day, or even in a single hour, you know? So the price movement of when you buy these options is very, very high instead of when you sell these options. So if you are a really good trader and you're able to make maybe one trade a month, and this trade goes, you buy an option, either a put or a call, and this call goes up 10, 15, 20%. There's people who made 500%, you know, by buying option, by buying puts when they think the market's going to crash. So when good traders are speculating with buying options, they can make a lot of money in a very short amount of time. Okay, in Brazil here, there was a case of an insider who knew this asset, this stock right here, was gonna go down because they were gonna change their CEO. Okay, so what he did, he bought puts. These puts, he bought very out of the money puts. Okay, he bought it for cents, like cents on the dollar, and the next day, the company of the stock announced the CEO was gonna be fired, and another CEO was gonna get in his place. So the stock dumped like 7 or 8% in a single day, which for the Brazilian market, it is ridiculous. It is really crazy movement for the Brazilian stock market. This person, he made like 14 million reais, so around like $3 or $4 million in a single day, just with these puts. These puts were like 5,000 or 6,000% in a single day profit. So you can see how when you get it right, it is way more profitable than selling options. But with selling options, you get sort of like dividends. Every month you're making that money, you know, it's just dripping little by little. But again, you need to have a very huge movement from the market, and you need to have the Greeks to your side. You need to have Theta by your side. You need to have Vega by your side. They need to be helping you, okay? Which is weird and it is hard to predict if you don't, if you're not always behind the screen analyzing markets. You need to know macroeconomics. You need to know geopolitical stuff, everything that is going on with the stock. So for you to be able to predict correctly every single time where to buy an option, where to buy a call, where to buy a put, which is hard. So this is why I don't do that. So I hope this was insightful for you, Funny Toro. But anyways, there is a lot of people who do that, who are profitable by buying options. I've been profitable buying options for a bit in the Brazilian stock market, because there was a lot of movements before elections, or before dividends get announced, before quarterly reports get announced. So these sort of movements make the market go, make you understand where the market's going to go, so you can profit from buying calls or buying puts. Other than that, for crypto, we don't have these announcements. They're not as clear. For example, for the merge, everyone thought it was going to be very high volatility. Volatility didn't even flinch. Actually, volatility went down. So we lost on that. I lost my call that I bought. I think it was $3,000 call that I had, just because Ethereum was at around 2,000. So it was like, Ethereum is just gonna spike after the merge, which didn't happen. So you see why it's better for you just to it is easier for you to predict where the market is not going to be than to try to predict correctly where the market is going to be, which is what you have to do with calls, with buying options. So now that we have Theta, I think if we have any questions about Theta, just let me know. But pretty much it is like it is a force that every single day or minute or hour acts on the price of your option itself. So it just eats a little bit of your price of the option every single day. So if you're a seller, it is really, really good for you. Again, let me send this link right here in the chat so you guys can read it if you would like to. Now let's go back to this selling puts, and let's see, the delta now. The delta now is 24 delta. Okay, a little bit high, but last week I think we also saw sold a 24 delta, so 1500. How much can we do? 4.8 maybe. 4.8. Let me do 4.7. Actually, this is too much. Let's do 4.3. Okay, 4.2 is good. Let me see. Oh, the camera is going to be in the way, so let me move the camera so you guys can understand what I'm doing. Every week I forget to move the camera. So what am I doing right now? I'm choosing how many contracts to use. What is my leverage going to be? So let me show you how to calculate this together so you can understand that you can do it by yourself. How you can calculate the amount of leverage that you're using, how much the contracts are, how much the collateral you need or you should need for it to be not leverage, and how much you're actually leverage if you want to leverage. So if we're selling a $1,200 put, it means that for you to sell a single contract, you need to have $1,200 in collateral. Okay. So if I put right here $1,200 and I put one, I will be fully collateralized. So I will have one contract and I will be fully collateralized, no leverage whatsoever. But since I only have 1,500 in capital, which is what I actually have a little bit more, I have 1,570, something like that. But I don't like to use all my capital at once. I like to leave some money to either buy it back if it is more expensive or to in case I need the money. So I round these numbers. So I can do either 1,550, but for sake of the example, I'm going to keep it at 1,500. So if I have 1,500, how many contracts do I need to be to not be leveraged? Okay, so it is simple. I do 1,500, which is the collateral I have, and I divide that by 1,200, which is the strike price. So this would be 125. So if I put 125 contracts right here, I would not be using leverage. Okay, so if I have 1,500 at 1.25 contracts, it means that I am not leveraging. I am fully collateralized and I will get that premium. Okay, a premium with no leverage, and we can calculate the yield from there. But I do like to leverage my positions. This is for my personal portfolio, because if I believe it was going to be if I can choose a position and leverage a little bit, or sometimes a lot, sometimes I do a little bit of leverage, I can make an extra yield out of it. Okay, so how much am I using for this strategy right here? 4.2 contracts and 1,500 in collateral. So this is simple. You do 1,200 and you multiply that by 4.2, which is how many contracts I'm using, which would give me $5,040. Okay, this is how much I should have in collateral for selling 4.2 contracts. So I'm using only 1,500. So to know how much I'm leveraged, I divide this by 1,500. And this gives me 3.36x. So I am leveraged 3.36 times. I am 3 times leveraged, which is very risky. I do not advise anyone to do it if they don't understand the risks. What is the risks? If you look down right here, once we go under the strike price right here in the profit loss, you can see that I start to get a lot of, I start to lose a lot of money. Okay. And I get to a liquidation point, which for me is going to be $1,090. So when Ethereum reaches $1,090, boom, I lose all the investment that I deposited. So I lose all the 1,500. It shows right here 4,000 something, because that's how much leverage, that's how much collateral I should be using for it to be fully collateralized. But in my case, I would just lose the 1,500 that I deposited in collateral. So you can see how dangerous it is to be leveraged. Okay, sometimes I lost, and I even showed it. I made a tweet showing how much I lost at 1.4% in a week, because I got 2% by selling the option. I got 6% loss, so a 4% total loss during that week, which was I think 2 months ago or something like that. So you can see how dangerous that is if you don't know what you're doing. But because I think volatility will stay around the 60, maybe drop back to 58, maybe go up and then go down, I don't think we will see by next Friday a $1,200 Ethereum, okay, which will be this right here again. It will be this right here again. So let's calculate the yield. How much, if I open this position right now, get this yield right here, how much would it be? How much, get this premium right here, how much would it be in yield? So to calculate that, it's very simple. You get the premium that you should receive. So in my case, if I do that, I will get the 59.36, and I divide that by the collateral, which is 1,500. Okay, it means that I'm making a yield of 3.95%, so almost 4% yield out of it. Okay, almost 4% yield. This is an amazing, very, very risky. So now I'm considering looking at it, the 1150, just because it is a very, very high yield, 4% for that low of volatility. So it might be a little bit risky. So now let's run it back with this one right here. So we put 1,500 right here with the, let's try with the 1150. 1,500, let's see if we can go to 5. Can we go to 5? Yes, we can go to 5, maybe 4.8, 4.8. So we get a $30, almost $30 in premium, but we are very leveraged again. So let's see what the premium would be for this one, 28.64. We'll divide that by 1,500. So we get a 1.9% yield. Well, I am tempted. I'm tempted to use this one. Actually, let's go to 4.9. Let's see if I get to 30, if I can get it around 30. No, 4.9. So how much is the leverage in this case by using the 1150 instead of the 1200? So very simple to calculate. Again, we do 1150 times 4.9. This should be how much I should have in collateral, but I only have 1,500, meaning that I am 3.75x in leverage. The further away it is from the actual price, so Ethereum now is 1268. The further out of the money you get, you can risk a little bit more with leverage, if you're going to use leverage, that is. So I am happy. I think this one should be good enough for me, and I don't want to risk it too much. And the delta right here is 12 delta, so it keeps falling, so it keeps being good for me. Delta is low. I'm getting 2%, very, very good. Let's do this. I was gonna get a little bit riskier, collecting a little bit more of a premium. Let's not do that. Hello, Kevin. How are you doing? Just got here. Is he using GMX? No, I'm actually using Lira. GMX is for perps. Lira is for crypto options. So I'm using Lira, which is only for Ethereum or Bitcoin options. So Ethereum or Bitcoin options. So let's run this, let's sell this and calculate how much premium we collected, how much is the yield for the week. So let's run this right here. Let's see MetaMask popping up. Very, very low fees. Transaction pending. Let's see how much premium I'm gonna get from it. Transaction was successful. So again, this difference right here, the profit and loss that you see, is because of the spread between the bid and the ask price. We collected 31 bucks. Okay, so we've made it over 2% yield for this week. So 31.62 divided by 1500. So we made 2.1% with this option right here, 2.1%. Of course, you can follow this position if you'd like. Let me share the link so you can follow it if you want to keep up during the week to see how it looks, to see if I'm profitable or not. But this should give us an extra 30 bucks in our portfolio. So if you go right now, it's not going to show just because we collected the premium, but we opened the position for a loss, the $7 loss. So we don't see that showing up right now. But it will be $30 more in our wallet. So if everything goes smoothly, we should have around 1600 in our portfolio. So really, really good yield for the week. So do you guys have any questions so far? If not, I would like to just end the stream. It's already 5:41 here, or 8:41 p.m. UTC. So let me mark again, so you guys already know the drill. I'm gonna clone this and I'm gonna mark it for next week. So this is gonna be our strike for next week. We go here to daily. Let me go to February 16th, Friday 16th, 5 a.m. Bam, right here. Let me just make sure it is at 1200. We lock it. So if you don't understand what I just did, these green dotted lines here are the strikes. So as long as, for example, if I sell a put, as long as the price of Ethereum, so the Ethereum right now is at 1264, as long as this number stays above the 1200, which is my strike price, then I am profitable. Okay, this is basically what I did right now. So if we don't have any more questions, you can check it out, what it was saying next week, which is Lira just got a 3 million injection from Frameworks, I think. Yeah, Framework and GSR. So they're going to be injecting, they raised 3 million, which is going to be injected into the vaults. So if you click right here, vaults, the TVL, I don't know if they already did, if it already went up that much or not. Yeah, I don't think so. But the TVL should grow by 3 million, most likely. I don't think they're going to open all of I don't think they're going to put the whole 3 million here into the TVL, but a good majority, because it's been going down for a lot now. So Funny Taurus says, if I leave my short put until expiration, will I get the Ethereum airdrop to my wallet? No, because these are crypto options are not settled with underlying asset. They're settled in stable coins. So if your position goes in your favor, you will get the collateral back, and you keep the premium that you collected. Okay. It is not like stock options where, for example, if it goes against you and you're assigned, you have to sell or buy these you have to sell or buy these stocks. It's not like that. It's a little bit different. We work with stable coins, which it is a little bit of a shame if you want to keep doing the wheel strategy, for example, which is very good for stocks, if you want to buy and wheel the stock over and over again. But it is bad if you're doing that for crypto options, just because we cannot wield the option, we cannot wield the asset. You just work with the asset, but you receive and you pay in stablecoins itself. So what is the other question right here that we have? hope this was. I hope you could understand that. Funny Toro. Mort says, how low would Ethereum need to go before you try to get out of the trade? That's a good question. In my case, for my trade, it depends, because if it is, for example, now we opened a position for next Friday. Okay, we open a position for next Friday. If I believe that, if for example tomorrow Ethereum goes down a lot, so Ethereum goes down to 1213, let's say by tomorrow. Let me actually show this here so you guys can see it, can visualize with me. Okay, so this line right here is when the option expires, when it ends. Okay, so the whole green is the whole duration of the option. We are right here. If by tomorrow Ethereum goes down to 1214, this is scary. Then I might be considering, I might consider closing it and opening another option, maybe selling a call instead. Okay, but if it is a Wednesday, or if it is a Thursday next week, a Monday next week, and it is very close, but I do believe anyways we're gonna close above the price itself, then I don't close it. Okay, everything depends on how much Ethereum is falling and how early or how late it is on the whole duration of the option itself, of the lifespan of the option, because these are weekly options. So if it is very early on in the process, if I just sold it and Ethereum goes down a lot, then I might just close it for a little bit of a loss, take the loss, and then sell it again for collect a higher premium, or collect even another premium just to keep it zero, so no loss, no gain. But if it is close to expiration date, and I do believe it's still, even though it's falling, like volatility is climbing up, but it's falling, but I do believe it is going to close in my favor, then I just keep it open. Okay, then I just keep it open. So if right now, if let's say by tomorrow it doesn't keep this support right here, so it breaks the support, it closes under the support, and it's looking like it's going to go down, and the moving average, it looks like it's not going to respect my moving average, it's not going to respect my my candles, my supports, then I pretty much just close it. You know, I'd rather just take a little bit of a loss than just wait and bet that it's going to go up, and it never goes up, you know. So that's pretty much the calculation that I do in my mind. It depends on how early or how late it is moving fast before the expiration. I hope this was able to solve your question, to answer your question. So, well, it got really dark here. Let me turn on this light. There you go. So, before we end the stream, I actually just posted on Twitter about how my week went. So if that's something that you would like to check it out, just like it a little bit, retweet it if that's something that you enjoy, just so other people can see it. I show my other tweets. I talk about how you can also make money out of here with my crypto course, or just by following me on YouTube, by watching these live streams, asking questions. So there's a whole lot of ways where you can learn how to do this as well. So that's something that interests you, just make sure to check out my Twitter at Vinsector, or just type Everton Mateos and you're gonna find it. And before we end our stream, I've been thinking about doing another channel. Not focus so much about finances or crypto in general, but more where we talk about the importance of your mental well-being, because this is something that I've been talking a lot in the Sleep Money Club, and a lot of on other Discords, and with a lot of people from Discord. Erman, we talk about this on a daily basis, how much your mental well-being is important, especially when you're trading. For day traders have nerves. They are always nervous. They are always looking at charts, looking at this. The emotions are bubbling inside. It is really hard to be a trader, a day trader, just because someone needs to focus on their emotional part when they're trading. It is not just about knowing numbers and knowing these sort of things. So I'm thinking about a channel where we can talk about, or where I can talk about in my ways. I can express about these sort of things that are not talked about, not only in the financial YouTube sphere, not only in the crypto sphere, but also about in general, you know, how a person relates to their money, how to relate with their sanity, how do they relate with their mental health, and all this sort of things. So this is a channel that is going to be very much me talking to a camera. This is going to be a channel for probably not everyone here needs to follow me on that channel or would like to see that sort of thing. Kevin says yes. Thank you, Kevin. I like the engagement for it. But I do think it is something that needs to be said, you know. I don't think everyone, for example, I have already a couple of topics here that I'm going to cover in that channel first, so you can understand that not everything is going to be about finances, but mainly around money or about society as a whole. So we have these are probable titles. So I have trading is bad for you. We have the cult of passive income, which I am part of. I am guilty of being part of the passive income cult, you know. But we are going to be talking about free will, YouTube finance, should that be a thing or not? The utopia of DeFi and crypto in general. Why do you feel the need to be rich? Then we have the refiner's fire theory. So all of these are topics that I would like to cover. And since those topics do not belong here in this YouTube channel, I'm going to be creating a new one. But I would like your help. I've been sending this these words or the link to a couple of people already, so you can help me out choosing a name for this channel, you know, how this channel is going to be called. So I'm going to be dropping a link right here. You can take just a few minutes, not even 30 seconds actually, to go to this link, the straw poll, and just vote on a single name or a couple of names, 2 or 3 names that you think might sound good for a YouTube channel that talks about these things. So if that's something that you can do, it will help me up a lot. Just click on vote. It's very fast. You don't need to log in on anything, and that will help me out. So I think this will be a conclusion for today's live stream. I hope you guys enjoyed. I hope you guys were able to understand a little bit more about crypto options. And I'll see you guys next Friday for sure, so we can discuss and talk about how it was for trading for that week, how it was for the options, how it was for market as a whole. So appreciate you guys tuning in. 52 minutes of live stream already. I'm killing you guys. Every week I do longer live streams. So I apologize for the long time, the longevity of the live stream. I hope you guys had a good time. So if you guys enjoyed, thank you so much. Appreciate everyone who is watching right now, who watched the video, who will watch it on YouTube later. Thank you to tuning in and watching the video. Check out the links in the description if that's something that interests you. And other than that, I'll catch you guys on the next video. Peace out.